Streaming from Oklahoma's own digital studio, this is Dave Davis with Your Money Matters.
Hey everybody, welcome back. It's another edition of Your Money Matters, the digital studio where we go outside and beyond our regular newscast to do these long-form expanded interviews, and especially with Your Money Matters and what my focus has been in the last year, especially with this financial beat, is that I want to make sure that you know ways to save money, that you know where your money's going, and that we are just setting ourselves up for financial success as much as we can. And I've become especially passionate about that. I kind of always have been, but especially over the last year, it's just really grown. And having great experts like my next guest is part of it. I mean, Stephen Cates is the financial analyst at Bankrate, one of the financial analysts. And Stephen is joining me today because we're talking about incredible news for Oklahoma homeowners. Stephen, good morning.
Good morning. And this is incredible news.
Well, and because so many times in Oklahoma, we get a lot of emails and it's like Oklahoma is last, Oklahoma is fourth, Oklahoma is middle of the pack, Oklahoma is this and that. But we're talking about Oklahoma being the number 2 biggest home equity growth since the pandemic. This is a gigantic number. And Stephen, I got on the phone with your publicist immediately. He's like, we have to interview about this. So what is going on with home value growth in Oklahoma? People who own homes in Oklahoma seeing huge value.
Absolutely. So, there's a few interesting sort of wrinkles within the data. But, on the face of this, what we're seeing for Oklahoma homeowners is that the amount of equity they have in their homes has expanded an enormous amount, 430%. Second only to West Virginia, which was 450%. And everything else below that, below 300%. So, head and shoulders, West Virginia, Oklahoma were enormous beneficiaries of the home value growth that we've seen. One of the reasons for that is because the average home value in both states, but Oklahoma is certainly part of this as well, is lower than the average nationally. And so when you have lower home values, an increase, even a small increase in absolute value, means that the relative increase on a percentage term is very, very large. And that is to the benefit of Oklahoma homeowners. One of the things that I think is really, really interesting about this is that in 2020, average Oklahoma homeowners had very little equity in their home. On absolute terms, we saw it was about $8,000. And that was a loan-to-value ratio of about 95%, meaning that only 5% was equity in the average homeowner's home, which is a very small amount. And it means that most people are probably paying extra insurance, private mortgage insurance, to their lender because they have less than 20% home equity. We're now seeing that in 2025, that's shifted to now most people, average, have more than 20% home equity in their home. And that's huge, one, because it puts people in a very good financial position compared to where they were 5 years ago. It also means that they can go request from their lender to remove mortgage insurance. And that's an extra cost they don't need to pay anymore. That puts more money in their pocket. So altogether, this is really good news for a variety of reasons.
And home equity, Stevens, home equity is such a big indicator of net worth and wealth and generational wealth and things that you can pass along to your family, maybe. So when we're talking about a 400% growth in equity, that means I had a $100,000 home in 2020. And correct me if I'm wrong here, but I had a $100,000 home in 2020. And without really doing anything to it or upgrades, it's now 4 times that, worth 4 times that.
Well, so not quite. So the value of the homes in Oklahoma have risen by about 46%, which is roughly average nationally. But it's the home equity, or the amount that you own net of what you're paying or owe for debt. So if you have your $100,000 home and you owe $80,000 to the bank on it, you have $20,000 of equity. And
right.
What we're seeing in terms of the growth of the home equity is you're 4xing that $20,000 over the last 5 years. So we're seeing the average home equity in Oklahoma go from 20% or 20,000 to 80,000 in this example.
Right. So you had 20,000 in your home, and now it's 88,000 basically, or 80,000 in your home.
It's 80,000 to follow those numbers. And so in real terms, what we saw is that the average homeowner in Oklahoma had roughly $8,000 of home equity, and that has transformed into closer to $47,000 in home equity. So an enormous jump. That's the 430% that we're talking about. From very little home equity to now $47,000, which is real value that you own. That's wealth that has been created for you in the last 5 years, simply by owning your home, also paying down your mortgage. And that's something that for a lot of people, they can tap with a home equity loan, or if mortgage rates start to come down, maybe even a cash out refinance. But that's wealth that you have, that you can use, you can borrow against, and is positive net worth for Oklahomans.
That's really remarkable, and thank you for clearing that up again, because all of these terms, just me, like the viewers, we're all on a journey with, this is the first, I'm in my first home that I've ever owned. Some people are just starting the home, and so it's really important for all of us to understand these terms. I think one thing that stood out to me also from this report, the average mortgage debt in Oklahoma is, and I say only $170,000 average mortgage debt. You compare that with the rest of the country, $256,000 in mortgage debt. I mean, debt is debt. I mean, $170,000 debt compared to $256, I'll take the $170 any day.
Absolutely. I mean, debt is debt, and generally mortgage debt is considered to be, quote unquote, good debt, because homes generally are assumed to appreciate in value, and that's certainly what we've seen over the last 5 years. You compare that to something like an auto loan, which is a loan on typically a depreciating asset, something that's losing value over time. Very rarely are you going to see a car that is 5 years old and is worth more than it was when it was purchased. But a home can appreciate, it can grow in value, where now homes are worth more today than they were 5 years ago. And that's where borrowing to buy a home can offer some benefits. Obviously, you want to be careful that you don't get over your skis. And as I mentioned earlier, people having larger ownership share in their home, reaching that sort of 80% loan to value ratio, meaning that you owe 80% or less of the value of your home, means that things like private mortgage insurance no longer applicable. That's less cost to you on a monthly basis. Your mortgage that you're paying has now fallen because you no longer have that extra cost that is required when you borrow to buy a home at a larger rate than just 80% of the value. And so that's something that puts money back in people's pockets right away.
Yeah, because what else nowadays is putting money back into our wallets? We're talking about nationwide utility bills going up, groceries and gas prices, to be fair, fluctuate, but we're talking about overall just shelter prices, insurance prices. It seems like the stalwarts are going up. And when you're talking about ways to create more money in your pocket, just go over it one more time. That PMI, the mortgage insurance, ways that we can put money back into our wallet. Explain that to us just one more time so people understand what we're talking about here.
Absolutely. So, for anybody who's purchased a home, if you borrowed enough so that your home equity is less than 20%, so if you borrowed 90% of the value of the home when you purchased it, or 95% of the value of the home, you've put down 5% as a down payment, or 10% as a down payment. And therefore you own less than 20% of your home, less than 20% when you buy it. If that increases to the point where you now own, your home is appreciated, you now own 20% or more of your home, with 20% or greater home equity, that means that you can go request from your mortgage servicer that they cancel mortgage insurance. When you breach 82%, they're going to automatically do it, but you might as well do it as soon as you can. And so that's something that is a benefit to every single person who has seen that kind of home equity appreciation, but may have put a small down payment down on their home. They can now reduce the payment that they're making every month because they have achieved this threshold level of home equity where that mortgage insurance can be removed. And so you've gotten onto the property ladder, you borrowed a lot of money to get that home. Now the home is appreciated to the point where you can not only have more wealth from that appreciation, you can now pay less money every month into the mortgage, and that's beneficial.
That's really great to hear, and thank you again, Stephen, for that explanation. Just making sure that people understand that 20% threshold is so important, and if your lender does not take those proactive steps, like for me, I got a letter that says, your mortgage insurance has been canceled, but if those preemptive steps are not being taken, that's really good to know that you can reach out, you can do it, and make that step today if you hit that 20%. I wanted to ask about home buyers because there's some people watching. It's like, well, the average home price, $217,000 in Tulsa right now, still a little bit rich for me. What are some of these numbers mean for somebody trying to get into the market and buy their first home or their first home in a while?
So that's the other side of the coin here, is people who have owned a home, they have benefited massively from the price appreciation in home values. And that's the wealth we've been talking about. People who have not been able to buy a home yet, or are simply just younger and looking to buy a home in the future, these home prices are a hurdle to getting onto that property ladder. Mortgage rates are as high as they've been in decades. That is maybe even a larger hurdle. But you combine those two, high prices, high mortgage rates, and it makes the average mortgage payment exceedingly out of reach for most Americans. We're at a point today where house affordability is as bad as it's ever been. And that's the trouble that most people who want to own a home are dealing with. It just feels like no matter how hard they try, how much they save, they feel like they're not quite getting closer. And one of the things that I think I say to people is that when you're looking for a home, you may be able to buy a home. It may not be the perfect home. It might not be the home that you dream of. But you can find a home if you look for it, and you maybe need to do a little work on it. That might be the first step to getting it. This might be a multi-step process. Very few people are jumping into their forever home right away, especially when home prices are high, especially when mortgage rates are high. So think about ways that you can figure out if that is a goal of yours. How can you do it? Can you buy a starter home, a smaller home? Can you find something that's maybe a fixer-upper, needs a little bit of work that you can grow into and work on over the course of the time that you're going to be there? And more than anything, looking for a home that you're going to be able to stay in for a long period of time. It's okay to rent. It's okay to not own a home, even if that's a future goal of yours. If you think you're in a position where, whether for work or whether for just your personal life, you might be moving around, you might not be ready to make that commitment. Don't make a big financial commitment in a rush, because that's really a recipe for financial regret. So think about what's going to be right for you at this point. Even if 5-10 years from now you hope to own a home, you don't need to rush into it.
It's really smart. And the other thing that I'm just keep thinking as you're talking, Stephen, and this has just been a great interview. Thank you so much for doing this. Is the other thing I just keep thinking, and it's related, is it is a process and a step-by-step that maybe it's going to take 5 years. Maybe it's going to take a financial plan where we're cutting out non-necessary things for a period of time so we can get into this home. But what I'm hearing from all these numbers, $175,000 average debt, $217,000 home price, your equity is going to grow 431% in 5 years as it has in the past. If we continue close to that rate, this is an investment worth making and a plan worth making, because this is wealth building and it's worth that sacrifice maybe up front on the budget end.
It absolutely can be. I mean, we see over time that homes appreciate. I think it's not necessarily, I don't think we can expect this kind of rapid appreciation for the next 5 years, like we saw for the last 5 years. I think we've had a very unusual circumstance. But for people wanting to get into a home, it's probably to their benefit that prices do not appreciate at the same level as they have been. We're already seeing home prices slow. We're seeing in certain very hot metro areas, home prices are actually starting to fall. So people who will want to buy, you may have a better opportunity to do it. Don't lose hope. Keep working, trimming some expenses, putting that as a high priority goal, and working with a lender to figure out where do you need to be to get a loan. What are the prices that are appropriate for you to look at? and continue to revisit that as you sort of work towards that goal. But we are absolutely seeing a slowing in home price appreciation, and we are probably going to see lower mortgage rates over the next 12 to 18 months. Those are going to benefit home buyers. It's certainly becoming a home buyer market as of today.
Yeah, especially relatively to what it has been, going in the right direction for home buyers. Stephen Cates with Bankrate, also a CFP, I should mention that, and the financial analyst there at Bankrate. Stephen, thank you for your time on this incredible report.
Oh, my pleasure. Happy to do it, and congrats to all the homeowners in Oklahoma.
Yeah, it's something like that, really. It is the salad days. Thank you very much, Stephen. And so, Your Money Matters, you can watch all these on News on 6's YouTube page. We thank you for being with us today. We will see you next time.
Thank you for watching this Oklahoma's own digital studio stream. Stay with News on 6 online and on television anytime for the latest news, weather, and sports.